Hey everybody, it's Pete. Welcome to Stock Trading Pro. In today's Stock Market Live, we're going to talk about all of the earnings that we have. We're going to talk about the GDP report. We're going to talk about how that's affecting the market, how it should have, or at least how we thought it would have affected the stock market, what should have happened now that we are technically in that consecutive GDP decline recession. Nobody wants to admit that's what's going on right now. The Fed reacting very aggressively again with a 0.75 basis points move again. And what does that mean? Well, we should have went down. We didn't go down. The tech stocks are rallying and raging higher, buoyed by Apple and Amazon last night. We had Roku and Intel in completely the opposite direction and imploding to the downside. We have some energy stocks earnings today and Procter & Gamble as well. We have a ton of stuff to talk about today. Actionable trades for swing trades that we're going to be looking for. And I think that the way the market is a little bit right now, some of these stocks, particularly the solar stocks, we're going to talk about that today as well. Is it too late to take advantage of them? A couple of them were up over 20% gains just yesterday. And we have the chip bill that went to Washington. There is so much to discuss today. The key to today and everything we talk about today is going to be you really need to be on top of your optimal entry. We spent a lot of time this week talking about whether or not when a stock rallies really, really hard, when is the right time to get in and when is the right time to pass and wait for a better opportunity. These energy stocks just rallying for the first time now, coming off of earnings after some bullish gaps last week. The solar stocks exploded yesterday, but not a great swing trade today simply because of the optimal entry. We're going to talk about the price action we're looking for. We're going to talk about the levels that we're looking for. And then we're going to talk about that chip bill and whether or not that's too far in the future to be looking at stocks today. There are some breakouts. AMD is right on a breakout level. So we have a ton of stuff to talk about today. Stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today. I really, really appreciate it. We're actually going to start out first taking a look at, this is obviously what the market did yesterday. We sold off a little bit intraday. The bids came right back in, closed near the high. Futures are still pretty strong. We're pulling back just a little bit, but overall the market's still in pretty good shape. So what we want to make sure that we focus on here is where are we and what's the next level? This level right here, this gap was a big deal. We hit that 2 days ago, blasted through there again yesterday, and then Apple and Amazon came out last night. So let's actually just take a look at those guys. Apple is up just over 2% and right at 161. So we're actually all the way up over there. And Amazon was the big dog last night, finally getting out of this trading range and now up at 137. So if you've been a regular viewer of our channel, and I hope you are, you know the big way that we're trading these big gaps on earnings and the news that we saw in the solar stocks is you need to learn tape reading. Tape reading is price moving closer to or further away from a significant number? And today, Friday, heading into the weekend, it's going to be interesting on these monster moves up. How much have they moved already? And how do I know if it's changed? Remember, our mantra for this channel and for our community is it obvious? And how do I know if it's still valid? How do I know if it's changed? So right now, the pre-market moves in these tech stocks is obvious. But what we need to know after the market opens, whether it's a day trade or a swing trade, but I think we're talking a little bit more about swing trading at this particular moment. How do we know if it's still valid? Because these short-term moves, the bigger economic picture, let's actually talk about that for a second. I'll hop on over there. This is really the big story of what everybody was talking about yesterday, really digging into the GDP. GDP was not good again, right? So contracted the second consecutive quarter. Now, what does that mean? You probably heard this no matter what news station you're watching right now. Probably everywhere stock market news is saying consecutive GDP numbers that are not good means we're in a recession. Now, the Fed reacted the way they did and stocks rallied. So what's going on right now is everybody is pricing in this bad news. The stock market looks to the future. Remember, when we're talking about earnings, we're looking at earnings report, and we're going to take a look at a couple of earnings in a second. Earnings report, they let us know how they did, and then they let us know what they're expecting to do. And what they're expecting to do is really what we're buying. If we're buying stocks right now, we do our scans and we're looking for the best stocks to buy now, we're buying tomorrow's earnings. We're not buying the previous earnings. The previous earnings are cool, but Warren Buffett says you can't invest looking in the rearview mirror. That's why we look at guidance. Guidance is a really, really big part of what we are paying for. Apple had pretty good guidance. Amazon had pretty good guidance. Roku did not have guidance. So really the bottom line, what I want to get across to you in a really, really important way right now, I'm sure everybody has seen thousands of headlines over the last 30, 45 days. Doom and gloom, stock market crash. We're going down another 50%. Michael Burry said this, Kathy Wood said that. The bottom line is learn to make your own decisions. That's why we're here. That's why we have our private Discord community. It's critical that you make your own decisions, because being influenced by headlines versus doing the work yourself and having that bias that you built because you did the work, so much more important. And I'll tell you why. When you learn what to look at, when you learn to read the order flow, when you learn to read the tape, order flow, is it obvious? Reading the tape, is it still valid? And how do I know when it changed? When you can do that for yourself, you'll never be lost again, and you won't rely on headlines or anything like that to give you ideas. You will have your own ideas. So the GDP number should have had the market go down, and it didn't. We kept going up. That's with the power of order flow and tape reading, is we're not guessing, we're just paying attention. Should it have gone down? Yeah. Did it? No. So if you were smart, you just paid attention to price action as opposed to the headlines. So we're going to move our way over now into sector rotation. We have a ton of stuff to talk about today. I want to start over here, which is, as you can see, the week unfolding. And, we actually there's a really good question we got on last night's coaching call, which basically goes like this. How do I know when I should take quick profits versus how do I know when I should trade for a longer term move? Now, again, longer term move is relative for everybody. For somebody, if you're day trading, that could be an hour. If you're swing trading, that could be a week to a month, right? But you need to qualify the conditions. And I can't stress this strongly enough. You decide the market conditions and what kind of profit target you're going for before you put the trade on. So we all know that we're choosing to accept risk on a trade. And I'm going to show you this on the screen in just 1 second. We all know that we have to accept risk on a trade. We know that as our stop loss. But based on that stop loss and the quality of the order flow, so really, how stacked is this idea? How many arguments can you put into the idea to say, wow, I really want to accept that risk because the odds of it moving in my favor are pretty good. But what we need to assess is the big picture. Then we go up a little more to sectors, and then we go to industry groups to find the best ideas. Then once we say, yeah, it's really obvious, then we need to say, what's a realistic target for that? Once we have the risk, the probability, the risk, and the reward, then it's just a question of managing the trade. But before we do that, to set our target and how we plan to manage it, we need to say, is the market really obvious right now, or is it kind of choppy and sideways? If the answer comes back obvious, and I'm going to show you what that looks like right now, then you could hang on to those trades a little bit longer. So you can see as sector rotation unfolded during the week, this was coming into Monday. The previous 5 days were pretty good. Previous 5 days were pretty good. Now, heading into Wednesday, it got a little bit less obvious because the Fed was announcing. So there was a lot more going on, so nobody was really taking big positions. The Fed came back. The day was amazing yesterday, heading into Thursday. And then actually heading into Thursday, the week looked better again. And now here we are heading into Friday. And you can just see the difference from the beginning of the week as the week unfolds into where we are right now. So right across the board. Now, the one thing I do want to point out is this group of stocks down here, healthcare and communication services. Communication services are actually getting walloped right now because of this guy. Meta actually resting at nearly a 2-year low right now. Showing a little bit of a bid right now, but nothing really with what the market's doing. But what I want to point out is this. Now, when I talked about building that argument for your idea, it really it's really pretty simple, right? You want your decisions when you choose to buy stocks. Yeah, you're going in there, you're getting stock picks, and you're like, is it obvious? If you can't come back with a yes or no very quickly, that means it's not. If it's hard to find, it's not there. So when you're trying to elevate your stock picking ability, you need to have some sort of system to do that. Whether you're just looking at the last 5 days, last 2 weeks, last 2 months, whatever it is, you need to do the same thing all the time because that's how you read the tape. Order flow is it obvious? And then the tape reading part of it is that part that I say is obvious, is it's still valid. So that could be breaking down from the previous day's low, the previous week's low, the stock maybe goes negative. Whatever one you choose to use, that's great, but it has to be consistent. So getting over now into what we're looking at over here, and then getting into how that sets up ideas that we're going to be looking at today. We'll actually start over here with AMD and with NVIDIA. We're going to start out with a couple of tech stocks today. They're both sitting right at breakout levels, and they both have resistance not too far away. So what we're experiencing right now is there's a lot of stocks that have had rallies that are now, if we have the optimal entry, we say it normally moves $10, just as an example, and it's already moved 5 to 7. That's not the best opportunity to accept the risk, because then you're looking at a one-to-one trade for a new swing trade. So what we're looking at right now in a lot of these tech stocks that have rallied, including Apple and Amazon, is they're already beyond the optimal entry if we are looking to put on a new swing trade in these stocks right now, because it's not perfectly at the moment where it's about to turn up or just started turning up. It's already moved a little bit. For me personally, the way I teach everybody to manage those positions is you could still put on the swing trade, but because there's less room to go, that's the phraseology, that's the term that we use. For me, that would mean less initial position share size. So remember, there's the three pillars. The three pillars are order flow, which is what to buy. Optimal entry is when to buy, and tape reading is when to sell. When you keep everything down to that simple 3 steps, you'll never be lost again, but you have to use them. So if we get into some of the stocks that I want to talk about, which are the solar stocks, because this really brings this point home with the solar stocks. So in case you weren't aware of the news, Rallia's energy bill provides broad, deep incentives. So if you don't know the energy stocks, you're probably going to write this down and maybe watch this part of the solar stocks. This is a big list of stocks that we trade pretty much every day in the community, and they have absolutely launched into the stratosphere yesterday and the day before, which means now that big part of that move is over. But there's still good news about that if you happen to miss that big part of the news. Now you have a group of stocks that can go into your game plan for next week. And again, this is what's kind of fun about trading, is we're setting up next week's trades on Friday. We're looking for the earnings catalyst from yesterday and even this morning to give us some short-term ideas. So this morning we have Chevron and ExxonMobil. We'll take a look at those. We also have, I believe, Procter & Gamble. And yesterday we had Roku, Intel, Apple, and Amazon. So we're going to take a look at those charts. So essentially the way that we're looking at it right now, and we've been talking about this quite a bit, the earnings plays typically will give you a catalyst based on the reporting of the earnings from anywhere from 2 to 5 days. You can usually get a really nice swing out of that, and pretty obvious too after the earnings get reported. Then after that move plays itself out, then you're looking for a pause. So we're looking for now in these solar stocks is a pause after they've exploded to the upside. But what's important to me, and hopefully you'll be back with me on Monday morning when we do the next live stream, is we'll start to game plan what we're looking for in those solar stocks next week. So we're going to point out what that is right here. So you can see the deep incentives, right? So this is where you want to write down these stocks. ENPH, probably the leader, and you can see the breakout level where it finally took off from and exploded. But now the stock is up almost 30%, I believe, in 2 days, something along those lines. If we just do a quick number here from where it closed, 28.5%. So what I want you to do, if you have to watch this video one more time, or just what I'm doing right now, you want to write these stocks down, because now we're game planning for next week. These stocks that had amazing, amazing bullish price action, but they're too far from the perfect spot to buy it. So that means for me, it will be a short-term trade, not a longer-term one, until it pauses, gives me a spot to manage the risk, and then start building a new position. Now, these stocks move pretty far. So we're going to do a very easy Fibonacci retracement level. It was also something that we talked about last night. This is where we can expect to find the next spot to buy. So we're going to use ENPH, but we're going to take a look at a bunch of the other stocks. So generally speaking, you want to use a Fibonacci tool from where the stock just recently rallied from. So we're actually going to use this level right here, but we're going to go down to the 60-minute chart, and we're going to start from here. And I want to zoom this out just a little bit. And it doesn't matter if you don't use the 60-minute charts. So essentially what we're doing is we're going to go from here to here, right? So if we have this built out already. It's kind of still stuck within this window. So that technically is the spot that we'd be looking to bid. But because of how far this has moved, I wanted to pull back a little bit, which is going to end up being right here, which is the previous day's breakout. So what I'm going to be looking for a spot to bid next week for a swing trade in this stock is right around 258. So 258 at ENPH, which is a pullback of almost $16 in this stock right now. But that's the spot where I feel that's going to be the optimal entry, where the stock has some profit taking, paused a little bit, and gave me a better reward potential. Because remember, probability is the first part. What are the odds of it moving in my favor? And then comes risk reward. It's pretty cool to set up risk reward, but if you don't have probability on your side, the better chance of hitting your target versus your stop loss, the risk reward and the entries really don't make a difference. So I just want to pull this back up on the screen, and then I'm going to give you the ideas, the other stocks in that group that we happen to be watching right now. So we're going to go back out to the daily chart, and you can see that level right there, the 258 level next week, waiting for this to pull back. So what I'm looking for is that kind of a candle. I'm looking for two red candles to the downside, and then I'm looking for that kind of candle where it trades below and comes back. So if you can visualize it, this is actually what I'm looking for right here. I'm looking for a little bit of profit taking today. You can see it's down a little bit. I'm looking for one day, Friday and Monday. Friday, Monday, and Tuesday. How about that? Yes, we do get that detail because that's where you want to be. You want to be in front of the trade. Just raise your hand if you're like, oh, I get bad entries. You get bad entries because you're not anticipating. You're not saying, if this happens, then I plan to do this. So I want to give you that visual again. And if you want, you can screenshot that again, because we're literally talking about Friday, Monday, and Tuesday, what we're looking for the next 3 days for ENPH to unfold before I put on a new swing trade. So let's take a look at that one more time. This price action right here, Friday, Monday, and Tuesday. So Friday, Monday, and Tuesday down into this level, maybe a little bit below. And then this day here is when I'm looking to put on a new trade in that direction. So the other stocks in this group that we're keeping an eye on are Run. Obviously, you can see how far the stock has exploded as well. Got a little bit of a wall of resistance, so we want that to pull back a little bit as well. So we also have JKS. We also have Nova. Again, they move to the upside. And we also have SPWR. So these stocks have exploded, and they're a little bit beyond the optimal entry, so we map it out next week. So now we want to take a look at some ideas for today based on earnings, those short-term catalysts. We're going to work our way into that, both into the sector rotation as well as the news stories. But the other news story that we want to get to here first is the House sending the $280 billion chip bill to get signed, to get reviewed, whatever language you want to use. So now we need another list of stocks, and we're going to be taking a look at these chip stocks. So we're looking at AMD, we're going to be looking at NVIDIA, we're going to be looking at TSM, right? We're going to be looking at TXN. So those are the primary stocks that are going to be committed. You see TXN actually coming into a pretty big wall of resistance right now. So because that news is out there right now, we don't want to get caught up and sell the news, but the stocks are going to have some attention on them. So remember, smart money attention is where we want our attention. When a stock is kind of dancing back and forth, stuck in a trading range, nothing going on, we leave that alone. If the smart money does not have its attention on it, why should we? There's really no other way to put it. And I'm actually going to give you a stock that had no attention for about 2 weeks and woke up a little bit yesterday and now has my attention, and that stock's Twitter. So we're going to take a look at that right now just so you have an idea of something that here, right there, couldn't do nothing for roughly 5-6 days, got up to this resistance level and just pretty much hanging out right there. Now yesterday, you can see the stock woke up a little bit and is right back at that level. So what we're looking for right now in Twitter, I'm looking for it to close on the daily chart above 41. So just the fact that it got there is not enough. I want to see it close above that level. And then the next level that I'm looking for is up towards 50. So we're essentially looking about a $9 rally. But I think the biggest thing that I want to train your eyes to look at right now is, it's a smart question. How do I know when smart money has their attention on a stock? Because remember, smart money has those bundles and bundles of cash, and they have big teams of research that make decisions on those cash flows that we're looking at. And then if their attention goes there, they start to spend money. We see that on the charts in the form of order flow, and then we look to take and make decisions, right? So you can see here on the Twitter chart, if we zoom this out a little bit, there was no really attention. It kept opening and closing in the same spot, smaller bodied candles, It wasn't like this. So now what we're looking for is attention came into the stock already. We're looking for it to close above this level and then looking for it to reach up to that area. Now, we actually have a couple of other ideas that we want to make sure that we talk about today. So we got the solar stocks, we got the tech stocks, right? Now we're going to talk about tech stocks on the other side of the market. You know what? Actually, you know what? Let's go to the bullish side of the market first. We know Apple and Amazon, right? So we want to take a look at those guys and see how much room there is to go in trades going forward in those two stocks. So we're going to take a look first at Apple. Apple basically came out and said, we're not seeing the supply chain issues. We're not seeing any of those problems. So now the stock actually, again, and this is really what I want to get across. This Apple chart, if you just heard me talking about the optimal entry and not buying when it's too far, you can quickly look at that stock right now and see all the pushes and pauses, the pushes and pauses. Our job is to identify the pause before the next push, and that's how we get some optimal entries. So we can actually take a look at over here and right here. So you can see the push and the pause, the push and the pause, and now it's already beyond the optimal entry. So now we're going to look for another trade after that. Let's see. All right, it looks like the audio is not awesome right now, so I guess we'll call it a meeting. If you're not hearing the audio, I don't want to take up your time. Let's actually call it a meeting, and I will see everybody soon because I can't do anything about the audio right now. So that's an internet connection. So have an awesome day, everybody, and I'll speak to you soon.